Do you want to start investing, but don't know where to start?
You finally found a broker on Wall Street that you can trust.
Stay tuned. Hey everybody, my name is Charlie Wayne. In today's video, I'll be reviewing Tangerine's investment funds. If you're interested in having your money make you money, then make sure you watch this video till the end. Let's get right into the video. Before I scare you away with some of the investing terms, let me just say that Tangerine's investment funds, you don't need any knowledge of the stock market, and the funds are maintenance free. It's a set it and forget it style of investing. Perfect for the new investor who just wants to get their feet wet. So what are Tangerine investment funds? They are a type of mutual fund called an index fund that tries to mimic a certain market index. Instead of putting all your eggs in one basket, you're putting a certain amount of eggs in a bunch of different baskets. To get started investing, it's as easy as opening up an account, telling Tangerine your risk tolerance and they'll recommend a fund for you, make an initial deposit, and set up automatic deposits. And that's it. Forget about your investment until it's time to cash out. This type of passive investing has an MER fee of 1.07%, which isn't as low as DUI investing or Robo-advisors, but a lot cheaper than actively managed funds. There is no account fees or maintenance fees. There's only a $10 minimum account balance. Also, you do not need to have a discount brokerage account. You can set up automatic contributions directly from your bank and have it rebalance for you automatically. If you're new to investing, you probably never contributed to your TFSA or your RSPs. Depending on your situation, you should have your Tangerine funds in either one of these accounts. I personally have my Tangerine investment funds in a TFSA. Tangerine offers 5 investment accounts: Balanced Income Portfolio, Balanced Portfolio, Balanced Growth Portfolio, Dividend Portfolio, and Equity Growth Portfolio. The funds you choose will depend on your risk tolerance. Typically, the lower the risk, the lower the return. The higher the risk, the higher the return. Your risk tolerance will depend on your goals with your money. If you plan on using your money within 5 years for a big purchase or for retirement, then you would want to lower your risks. If you are young and don't need your money for 10 years or more, you can take a higher risk to get a higher reward. So all in all, Tangerine funds are not the cheapest option, but they're the easiest way to get started investing. Just deposit your money and let Tangerine do the rest of the work. No need to pick stocks or bonds, no need for account managers or brokerage accounts, and no need to rebalance. With return rates that range from 4.5% up to 11%, your short-term savings are better off in a TFSA account with one of Tangerine's investment funds than having it sit in a savings account only earning 0.5 to 2.5% in interest. But if you have really short savings goals, like 1 to 2 years, maybe you're better off having it in a high interest savings account. Click this video up here to learn more about Modus Bank and their 2.5% on their TFSA accounts. And if you have long-term savings goals, maybe you're better off with DUI investing or Robo-advisors. Keep an eye out for my next video on how to set up a Wealthsimple account. And if you like this video, make sure you hit that like button and share this with a friend. And if you haven't already, hit that subscribe button down below and that bell icon to get notified when new videos like this come out. Thank you for watching. And if you got any comments or questions, comment them below. Until next time, keep making money moves. Peace!